Have you ever looked at a chart, marked your levels perfectly, predicted exactly where the market was going, and still lost money? If that's happened to you, you're not alone. The biggest lie traders believe is that better analysis automatically leads to more profits, but guess what? It doesn't. So in today's video, I'm going to explain why good analysis isn't enough to make you profitable. Then we'll apply it to a normal top-down analysis using the UK100 market. Welcome back to our channel where we don't just predict the markets, but we learn how to think like disciplined traders. In our last video, we did our analysis on silver, and I think that was on Tuesday, and this was our entry on silver. We had a sell entry on silver. I think it was a pending order that got activated, and if you had your trend lines out and you did not take this pending order, this would have been another entry for you. And guess what? Even if you did not take the entry on Tuesday, Wednesday still presented another opportunity. So it came and reacted on this order block here. So I think there was an order block here. It reacted to it and then moved down beautifully. So this has gone right up to 90% of our take profit. So like I said, it's always good to take partials at 50%, 80%, then you just leave the rest to run. So I still believe that this is a sell and it's going to sell right up to this trend line here. And let's look at the BTC trade we were in already. Let's see how BTC is reacting currently. So our BTC trade from last analysis is still in progress and we're currently in profits. So if you see here, I think we came right up to about almost 50% of profits, and I actually took partials, so now it's retracing back. So you can wait for another retracement maybe to this trend line, and you see there's like there's a fair value gap here. You can wait for it to react in that fair value gap, then you take another entry. Alright, so today's video we're going to talk about the fact that you can have very good analysis but still be in losses. And guess what? This is something that I've actually been going through. In the past years that I've been trading, I've realized that my analysis was not really the problem. In fact, many of my market predictions were right? Because these are two trades that we've taken in the past this week, but I can still not boast of being profitable. At one point in time, I would either stop respecting my higher time frame analysis, or you'd see me forcing trades, or I'll be chasing the market instead of waiting for my setup. And that's when I realized something very important, that analysis is going to get you into trades, but discipline keeps you profitable. Let me say that again. Analysis is going to get you into your trades, but discipline is what is going to keep you profitable. So why do many traders lose money despite good analysis? There are a couple of reasons that I'll talk about. We're going to talk about poor entries, risk management, psychology, and not following your trading plan. So when you talk about poor entries, many traders are directionally correct, right? Like here, you'd see that it's in a downtrend. Yeah, that's fine. But we're going to enter too early. Price is eventually going to go where we are expecting it to go, but would still get stopped out before that happens. At times you'd ask yourself, that is the market against you, or your prop firm, is it looking at your account and just waiting to hit you out before actually moving in your direction? So that's one of the reasons why we have good analysis but we still lose money, because of poor entries or early entries. And then the next point is risk management. You can win 70% of your analysis and you still lose money if your losses are bigger than your winners, right? So you have to make sure that your trading risk to reward ratio is always good. Like we always take 1:3 or 1:2.5 minimum as a risk to reward ratio. So good traders don't just think about where the price is going, they also think about how much they are willing to lose if they are wrong. And the third point to why we lose money despite having good analysis is our psychology. I think this is the biggest for me. Fear makes us close trades too early, and then greed is going to make us hold trades too long. And guess what? With fear, we close our profits too early, and then with greed, we hold our losses too long. Then overconfidence makes us ignore our trading plan. So you can actually see profits and then still lose all of it, either because of overconfidence, you're not following your trading plan. For example, we say take partials at 50%, 80%, and then you leave the rest to run. But because you see that no, this must be the direction of the market, you see profits and don't take partials and allow it to run, and eventually you lose all of the money. And none of these problems are caused by analysis, just your psychology. And another point is your trading plan. When you're not following your trading plan, or you don't even have one, knowing where price might go isn't the strategy, right? You know that, okay, it's in a downtrend, but the strategy is what is going to tell you when to enter, when not to enter, where your stop loss goes, where to take profits, how much risks to take. And without all of these rules, your good analysis is just going to become like random trading. So confidence is not going to come from your winning trades, but it's going to come from you trusting your process. So having all of these in mind, let's look at the analysis of today. We're going to be analyzing a different market. I think I've never traded this market, but I want to add it to my wait list. It's the UK UK100 market. So we're going to analyze it together and see what is happening. So let me turn off our indicator here, and then we go down to the monthly time frame for our top-down analysis. So let's see. We see that it's in a beautiful uptrend even without drawing our trend lines. So we'll start with our ray tool. You connect the most recent lows. This is good, and then I think there's another critical low here, and then we could try to connect the most recent highs and lows. We can go down to the daily time frame. So let's see what we have on the daily. Now we go down to the 1 hour time frame. And we can see that we have, let's see, we have a support and resistance zone around here. One, but let me turn on our indicator too. So you see resisting top because we're first in an uptrend, and then we've reacted. This is the second touch on the trend line, and then the buy. So I think we're going to place our buy limits on this trend line, and remember we have like the Asian low here, so it might eventually sweep the Asian low to continue buying. So let's just place our buy limits here, and then we can target the next trend line, which is this one here, as our take profit, and our stop loss is going to be slightly below our support and resistance zone. So we see this is a 1:4 ratio. So I think this is going to be our order limit for today. It's going to be a buy. So let me know if you're going to take this. All right, so just to summarize today's video, we've realized that good analysis alone doesn't make you profitable. The market is not going to pay you for being right. So a trader with a very average analysis and excellent discipline would usually outperform a trader with amazing analysis and poor discipline. So I think that sounds much like me. I have good analysis, but my discipline is horrible. So I would love to hear from you what you think has held you back the most, your analysis or your discipline. So just let me know in the comments. And remember, the goal isn't to catch every move. The goal is to stay in the game. Thanks for joining, everybody. Bye. See you in the next video.